Welcome to Biztech's Investor Conversation Show. I'm Brian Fernandez, and our guest today is Yasser El-Ansari, Chief Executive of the Australian Investment Council. Now, the Australian Investment Council is the voice of private capital in Australia. Yasser, welcome to the show.
Thanks very much, Brian. Great to be with you.
Now, Yasser, can we start by just giving us an overview of the Australian Investment Council?
Yeah, thank you. So we are an industry body, Brian, that represents the entire spectrum of private capital investment here in the Australian economy. We have member firms that are spread across private equity, large buyout, private equity, mid-market expansion capital, private equity. We also have member firms in the venture space who are backing, of course, some of the Australia's leading innovation opportunities in the domestic market and globally as well. We also represent the interests of investors, the large institutional investors in particular who allocate capital into private market strategies. And we also have member firms who are in the private credit space. So it's a broad church. We have many different forms of members. Ultimately, though, what we are here to do is to support our members, to support the growth of private capital investment here in the Australian market.
Now, Yasser, help us understand the overall regulatory landscape around private capital in Australia.
Yeah, look, it's been a really busy time here in Australia for the past few years. We know that, of course, the Australian economy has performed very, very well for more than 25 years now. The pandemic last year was the first time that Australia entered negative economic growth for more than 25 years. A remarkable story, really, when you think about that in the context of what's happened during that time in global markets.
Unparalleled globally.
Absolutely, and it's something we often celebrate, and we still continue to celebrate it. I mean, every economy had some significant impacts from the pandemic last year, and Australia was not immune from that. But even still, Brian, even after the negative economic growth that we experienced for a few months last year, the Australian economy rebounded back into growth very, very quickly. And so we're in a good position again now. But broadly speaking, in answer to your question, the Australian government has been working really hard now for probably the last 10 years, to be honest, to support the growth of innovation, to support the innovation ecosystem more broadly, to support the growth of SME businesses as well. And that's been recognised by the government as being a really important part of the strength and the ongoing strength and sustainable growth of the Australian economy. And that's why they've invested heavily in policies that promote investment, in policies that promote the growth and expansion of businesses, the transition of businesses, managing succession planning, dealing with the taxation issues, the corporations law issues. The government has been working really hard for a very long period of time now to make changes to the policy and regulatory environment to make doing business easier. And I think there is still a lot of work to do. I would say every government around the world still has lots of work to do on this one, Brian, as you know. But pleasingly here in Australia, I think there is very clear recognition that Australia is a net importer of capital. We rely on outside investment coming into our economy to support the growth of all businesses across just about every sector of our market. And so we need to be very conscious of the fact that Australia needs to have competitive policies and competitive regulatory frameworks in order to incentivize that capital to come into the Australian market. Otherwise, if we don't, the government knows very well, and certainly we talk to government every day about this as well. If we don't get that competitive balance right, Australia will miss out on attracting that desperately needed capital into our domestic market, and that capital will go to other jurisdictions around the world.
But yes, so there is a global competition for capital. So this is a very interesting point that you brought up. Australia is a net importer of capital. But interestingly enough, Australia has a huge pool of superannuation funds domestically. Where is that deployed?
Yeah, it's a really good question, Brian. And I often get asked this question from people outside our market, especially in Asia and around the world. You're quite right. So Australia has a compulsory pension system, a compulsory pension accumulation system, effectively, where 10% of our salary is deposited into a pension savings account and locked away until a certain minimum age is reached, and that age is somewhere around about 65 years. For most of us, depends on when you were born, but that has really propelled Australia's institutional savings pool very rapidly into, I think we are now the third largest accumulated savings pool in the world, which is remarkable. And we've achieved that in the space of around about 25 or 30 years. We have done very well.
With a relatively small population as well.
With a relatively small population.
Size of the funds.
Absolutely. We have a total combined population here of, I think, about 26 million people. So you're quite right. You know, we've done that on the back of very small, relatively speaking, small population compared to other markets. The answer to your question about we have a large savings pool, where is that money being deployed or where is it being invested is quite a complex one. The simple answer, though, is that the institutional investors here in the Australian market, particularly the pension funds or the superannuation funds, as we call them here locally, they have significantly invested into the Australian economy already. They have significant shareholdings in many of our publicly listed companies. So our pension funds own a very significant proportion of our listed market. They own, I think probably in general terms, they own every piece of infrastructure that there is to own in the Australian economy, from airports to toll roads, to hospitals, to port facilities, you name it, electricity distribution and generation. They are significant investors into infrastructure, and Australia has very, very strong credentials globally when it comes to infrastructure as an asset class. And then they have also invested heavily into commercial property. I can see behind you some fantastic office buildings that I'm sure in part are not as busy as they should be because of the pandemic, but it's the same here in Australia. All of our office buildings, all of our commercial property around the country, broadly speaking, is owned by our superannuation funds, because they are generally, other than pandemic times, obviously, they are fantastic long hold yield investments. What that means, though, is that the fact that the pension funds have invested heavily in those asset strategies already really means there are only two other areas in our economy where those pension funds can continue to deploy significant volumes of capital. The first is the residential property market, which for a variety of reasons is very complex for pension funds to invest into, and politically sensitive as well, given you're talking about individual members of the community and their housing.
And Yasser, just to highlight that point as well, because you get a backlash like you have in the US right now politically, in terms of large pools of funds owning thousands and thousands of investment properties and homes around.
It's really difficult. Yeah, it's really difficult. Absolutely right. It's really difficult for institutional grade investors to play in that part of the market. So that's one area, though, where our pension funds don't have a significant weighting of capital at the moment, and I would probably argue we're unlikely to see them push a significant weighting of capital into that part of the market for those reasons that you point to. And really, after that, there is only one strategy that remains open, and that is the unlisted business space. And that's exactly the area that I spend my time in day to day. It's the area of private capital investment broadly. And so what we're seeing is that our domestic superannuation funds are allocating a modest portion of their capital base to Australian unlisted assets, like private capital, private equity, venture. And a significant portion of their allocation is actually being deployed offshore. And so we're seeing Australian superannuation funds allocate large amounts of capital into private equity, private credit, venture in markets all over the world, including the US, Asia, the Middle East, Europe, and South America. And so as large institutional investors, they of course have to diversify their risk, and that is one way they are going about diversifying their risk, at least from a geographic perspective.
Now, interestingly enough, Yasser, when I was looking at your 2021 yearbook report, 2020 was a year of high growth and investment, but your assets under management are 77 billion. Now, relative to the superannuation size, you've got a huge opportunity of growth ahead.
Absolutely. You're quite right. So $77 billion in absolute terms is a massive amount of capital.
Yes.
Right, Brian, for any of us to be talking about. But of course, relative to our accumulated savings pool in the pension system, which is currently sitting at around about $2.5 trillion, it's a drop in the ocean. And so it is all relative, as the saying goes sometimes, but it's something we're working very hard with our superannuation funds, our pension funds to improve over time, to lift the amount of capital that's being allocated out of those big institutional investors into private market strategies here in Australia. I think the reality though, Brian, is that Australia will always, we have been a net importer of capital for a very long time, for many, many decades. And so it will be likely, I think, that we will continue to be a net importer of capital for the foreseeable future, notwithstanding that we have those large institutional investors in the form of the superannuation funds that we talk about.
Yasser, your report, the 2021 yearbook report, highlights the fact that your members have 13.5 billion in dry powder to put to work. Where has the money traditionally been deployed, and at what stage and sectors?
Yeah, really good question, Brian. So if I just break down private equity first, and then I'll come to venture. When you look at private equity, Australia still is very much dominated by SME market private equity transactions. Most of our businesses are in the SME sector. We know that from a media reporting perspective, large listed companies that from time to time are bought out by private equity firms tends to make for very good media attraction, very good front page news, as it were, and attracts a lot of focus for those reasons. But in fact, when you look at the data, and you look at the data that's in our yearbook that you're referencing for 2020, you see a very clear picture, which is very consistent with how things have been here for the past 20 years. And that is that most private equity investments happen in the mid-market area, happen in the family business space.
So in an Australian context, mid-market is 50 to 100 million US? Or
look, it depends on what lens you're looking at things from. But I would say in an Australian market context, Brian, mid-market is a little bit broader than that for us. I would say it's anything from potentially, businesses with an enterprise value of say $50 million or even $40 or $30 million through to, $200 million. Okay. It could be as broad as that range, which captures a large slice of the business sector. And that's what I am really pointing to here, is that most private capital transactions occur in that part of the market. So when you dig a little bit deeper though, and you look at the sectors that are attracting the lion's share of investment from a private equity perspective, far and away the area that attracts the most investment for private equity is consumer discretionary, which some will say is quite a surprise given the impact of the global pandemic, and there were lots of predictions of consumer spending driving down the sector broadly for consumer discretionary. But in fact, what we've seen here in Australia is a picture that's very consistent with the past decade, and that is that private capital firms continue to be attracted to investments in the consumer discretionary space because of the fundamental attributes that go with businesses that exist in that part of the market. Really strong cash flows, the capacity for private capital firms to work closely with the management teams of those businesses and deliver earnings growth, to roll businesses up as part of a strategy to create a stronger, more powerful business group, for example, by consolidation of smaller, sub-economic, sub-efficient participants. That sort of strategy is still very strong in the consumer discretionary space. The other area that is dominant for private equity firms in particular is financial services, and we're starting to see a lot of capital move into that part of the market, largely because of the significant level of disruption that's occurred there, not just in Australia, but right around the world. When you look at venture, Brian, just briefly on this one to break down the equivalent data points there, what you tend to see, again, very consistent story over the last decade or so, but probably been building in particular over the last 4 or 5 years now, is around about a third of all VC investment is going into the digital and tech space. Okay. Another third is going into the fintech and insurance tech area in particular. And that's been a standout area of significant growth within Australia's innovation ecosystem over the last few years. And then about 10% of the total pool of investment capital through venture is going into life sciences, to health and medical research, and the translation and commercialization of medical research. So that's an area where also historically Australia has punched well above its weight in global terms, and it doesn't surprise me at all to see continued growth around the level of investment moving into that part of the market.
Now, you talked about Australia punching above its weight in terms of technology and innovation globally. Some of the areas, besides the ones that you've talked about, are also some rather unlikely areas. For example, in defense technology, you have Boeing working with an Australian company on the Loyal Wingman program, which is basically partnering the F-35 with unmanned drones and stuff like that. You wouldn't think that something like that would come out of Australia, but Boeing is partnering an Australian company, and I think the Australian government is investing in that. The other areas are things which Australia traditionally was strong at, but people don't realize, also agricultural technology and mining technology. Do you have some stats and information that you could share with the audience?
Yeah, look, I mean, you're quite right. Australia is known globally for being a very significant powerhouse in the resources and commodities space. And that's delivered some really significant economic growth to our market for a very long time now, including during the global financial crisis a decade ago. It was the reason why Australia was able to continue to perform so strongly. But look, the reality is that we do have very strong credentials when it comes to the emerging tech space within those sectors. So the ag tech space is an area where Australia has very strong credentials, because Australia traditionally has strong credentials in the agriculture market. We've been very strong in the production of wheat, in other commodities, sugar, barley, and others. And so it is quite natural then to see the technology and the innovation that is spawned out of those primary sectors emerge and come back into those sectors in the form of new technology and new disruption. And so that's what we see around Australia. We see that in the mining and resources sector. One company that we know really well here in the Australian market at an Australian Investment Council level is a company named Ageris, which is an agricultural robotics company that's commercializing a field robotics technology to support farmers and growers, and do so bringing some of the world's leading global environmental sustainable practices to our agricultural sector. That's a business that's attracted already considerable funding from a bunch of venture firms here in the local market, and I expect that to continue to grow, because there is a very clear product market fit for a business like that, not just in Australia, but globally. So that's the sort of thing, Brian, to your point, absolutely. Australia is not as well known as perhaps we should be for having strong credentials in the enabling technology sectors that support those primary sectors, such as agriculture, mining, resources, and commodities. And I think that's something we need to do a much better job of explaining out to the rest of the world. And speaking with you this afternoon is a prime opportunity to continue to spread the word on Australia's credentials in areas like that.
The other thing that I found that when researching for this interview is the fact that your startup ecosystem is actually very, very vibrant. Now, Australia is actually home to about 28 tech unicorns, including some familiar names that we know even outside of Australia, I mean, across the world, really. Names like Afterpay, Canva, and Atlassian.
Yeah.
What do you think that, it's a country of 25 million people. what 25 to 27, whichever, I mean,
Yeah,
where you look at it as
around
27
that,
billion.
around that.
But
Yeah.
but what do you think makes Australian companies interesting, and what do you think that has allowed them to grow so quickly?
Yeah, look, it's a really good point, this one. And again, something we talk a lot about domestically as well as globally when there's an opportunity. And that is that Australia does have a modest population. We talked about this a little bit earlier. But we do innovation really, really well. We have very bright thought leaders here. We have entrepreneurship right across all sectors of our economy. We have a young population on average that is willing to take some risks to give something a go. That is a very famous Australian saying here in our market. For those of you watching this program that will have experienced Australia at some point, you'll know that the saying "give it a go" or "have a go" is something that is part of our DNA. And so I think our fundamentals are exceptionally strong around entrepreneurship and our capacity to innovate, and not just innovate by bringing a brand new, completely untested product or service to market, but innovate by iterating existing products and services and adapting them into other sectors or subsectors is something we do exceptionally well. We also have a range of attributes, Brian, that place us in a very strong competitive position in the Asia region as well. We have a legal system that is, whilst complex to us, of course, on a day-to-day basis, in relative terms globally, we have a legal system that works really well. It is stable. It is predictable. It allows you to enter into commercial partnerships, agreements, contracts, and know that you have the full protection of the law with you should something go wrong. We have a very stable political environment. We have stable policy settings. All of the attributes that make investing and deploying capital that much easier for those who have to make difficult decisions about making investment calls, knowing that they're potentially locking their money away for many years. When you have stability in areas like politics, policy, regulation, the legal system, and also, of course, it has to be said, it's a fantastic lifestyle here, and that helps to attract investors. It helps to attract entrepreneurs. It helps to attract our own people to stay here as well. Quite frankly, a lot of Australians love to stay in Australia, even if they go overseas for a while to work and to get some experience. They invariably end up coming home, which is a fantastic thing for us to be able to do, of course, to have that talent come back to our market. They're all of the things, Brian, that I think enable that innovation to be unleashed in a domestic context as well as globally. And that's why I think we punch above our weight. The one thing we haven't done very well is we haven't told that story to the rest of the world. And I think the Australian government, the investment promotion arms of the Australian government, people like me and my counterparts around the financial services sector and the investment sector broadly, we all have a role to play in explaining how competitive, how innovative, and how compelling the Australian economy is for investors all over the world.
Now, Yasser, the other thing that obviously will help in terms of, and you as an industry body, to get to shout out what you're doing is really collaboration across the world. What sort of collaborations are you doing, for example, with us in ASEAN?
Yeah, look, I agree with you entirely on this one. I think we operate now in a global universe of investment capital, in a global race for talent, in a global race for investment dollars, as we observed earlier. And so it becomes even more important that we engage in a global context in ways that support and enable the growth that we want to see realised in our domestic market. So we talk regularly with our sister body, the Hong Kong Private Equity and Venture Capital Association. We talk regularly with the Singaporean Venture Capital Association. We engage with private equity and venture associations across Asia, including in markets such as China, in Japan, Malaysia, Indonesia. There is a really strong bind between private capital, industry bodies all over the world. And then, of course, we have large sister bodies in markets like the US, in Europe, in the UK, and elsewhere around the world. They are established, they are large, dominant players, they are well known in those economies as well. But I think personally, and I'm a little bit biased, of course, because Australia is a part of the Asian region, and I think the Asian region is the most exciting part of the global marketplace now. It's the area where there has already been considerable growth over the past 20 years now, and it's the area of global markets where I think we're going to continue to see a significant lift in economic power over the next 10 or 20 years. And so it's a really exciting time to be in private markets in the Asian region, and we make sure that we collaborate with our sister bodies around the Asia region to ensure that we share knowledge, we share information, and we collaborate at every opportunity possible. COVID-19 has impacted on our capacity to do a few things, of course, and one of them is to be able to run, events together and to bring people from Australia and various economies in Asia together. But hopefully in the next year or the next 18 months or so, we're all very hopeful that we'll be able to resume connecting in person in the normal way that we have done for many, many years.
Now, Yasser, any final thoughts that you'd like to leave us with before we end this conversation?
Look, thank you, Brian, for a really energizing chat. I'm very pleased that we've been able to talk a little bit about the innovation ecosystem here in Australia and what's happening, because as I said, there's a really good story to tell. We need to create every opportunity we can to share that story. The one final reflection for me is very consistent with some of my observations earlier, and that is that for any investor, for any entrepreneur, whether you're a large investor or a smaller investor, I would certainly encourage you to look closely at the Australian market, look at the opportunities in this ecosystem here, look at the opportunities to build relationships with participants in the local ecosystem. Australia is a fantastic place to do business. We have great entrepreneurship, great innovation, great policy and regulatory architecture around our economy. And it is a fantastic platform from which to grow businesses, into not just the Asian region, but also the global market. So my message to all of you watching this program today is make some time to have a close look at Australia. Start with some of the reports that we have on our website, if that's helpful from an investment point of view. aic.co is the place where you can go to find the report that Brian referenced earlier, and you'll find a range of other information that will support a picture of what the Australian private capital ecosystem looks like at the moment. It's a really exciting place to engage, and if I can be helpful to anyone out there looking at the Australian economy at any point, please do get in touch.
Now, Yasser, thank you very much for that enlightening conversation and for taking your time to share your views.
A pleasure. Always a pleasure, Brian. Thanks so much for having me.
I'm Brian Fernandez, and we've been speaking to Yasser El-Ansari, Chief Executive Officer of the Australian Investment Council, on Biztech Investment Conversation Show with the Australian Investment Council. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks again for tuning in.